this is Lillian. Welcome back to my channel, a place for Canadians to learn how to save, protect, and grow your money. Today, let's talk about TFSA, tax-free savings account. If you are new to this, keep watching. So tax-free savings account is an account that all your contribution and your investment returns and including dividends, interest earned and capital gains are not taxed, and it can be withdrawn tax-free as well. It is a true tax-free account. So who can open TFSA account? If you are a Canadian resident and you are 18 years or older, and you can open a TFSA account. The TFSA contribution started in 2009, so which means if you are 18 or older at 2009 until today, 2021, and there is $75,500 of room available to your TFSA. This has nothing to do with your income or anything, it's just your residence. Side note here, if you are from a province, the age of majority is 19, you will have to wait until 19 to open the TFSA account, but your room will start to accumulate while you were 18. So when 19 years old, when you go open, you can contribute the amount for 2018 and 2019. So the contribution room change from year to year. It depends on the government, and they will announce at the beginning of each year how much room that they give. And I included a table here. It has a list of contributions available every single year and how much is the total adds up. Hold within a TFSA account. Well, TFSA, even that it says it's a tax-free savings account, it's supposed to be used as an investment account. So you can put the stocks, bonds, mutual fund, segregated funds, options, ETF, and cash, GIC, all of these in there. When I was working in the bank, I remember people will come in and say, I want to buy TFSA. Well, there is no such a product called TFSA. So TFSA is an account that government give you, then you have to decide what you want to put inside the TFSA. So you can open TFSA account in various financial institutions like a bank, credit union, insurance companies, or investment company or mutual fund companies, or you can do self-directed brokerage. So from my experience, I saw lots of people, they open TFSA to save for, say, a vacation or a TV, or for different things like a short term. Actually, TFSA is a really good account if you can put long-term investments in there and let it grow, because the more it grows, the compound interest will take in effect, and you can make this account really, really big. By the time that you retire, then you have all of these tax-free money sitting there and waiting for you to use. How awesome is that? Unlike other registered accounts, TFSA is fairly simple in terms of rules, but there is still a limit for this account, and that's the withdrawal and the contribution limit. Allow me to explain. For withdraw TFSA, you can withdraw the amount in there anytime you like. And any withdrawals from TFSA will be added back into your TFSA contribution room the following year. What does that mean? Say if I withdraw $5,000 now, and if I want to put it back tomorrow, that doesn't count because that room is not available yet. So if I do put it back tomorrow, that will count as my extra $5,000 of room. So if you have enough room in there, that's fine. But if you already fully contributed, then that will be the over contribution part of your TFSA. However, if you take out that $5,000 today and do not put it back until next year, next calendar year, and the room is available to you, so you can put it back. So pay attention here is that it's the calendar year, it's not a year from today, which means if today is December 30th, I can take off $5,000, and 2 days later, January 1st, I can put that money back in, and that's no problem at all. Your TFSA room will record on your notice of assessment, and you can find it there. The only thing is that it's not as updated as you think, so it is the best to track TFSA account yourself. And I made a very simple Excel, and I haven't figured out how to put it on my description box yet. So please email me or text me on Facebook if you do want to get that spreadsheet. I can send it to you. If you know how to put a link on a spreadsheet, please let me know so that I can do it next time. Tracking TFSA is very, very important. You can have multiple TFSA accounts, but you cannot over contribute into your TFSA. If you do, there is a penalty tax of 1% of over contribution limit every month, which is 12% a year. That is quite a lot. So pay attention on this one. So how do you calculate your total contribution room? And your total contribution room is any unused room from the past plus any withdrawal you did in the last year and new room that's available for you this year, decided by the government. For example, I have $10,000 of unused room from the past, and last year I took out $2,000, and this year the government told me there is a $6,000 of new room available to me for my TFSA. So I will add the unused room of $10,000 plus that $2,000 that I withdrew last year and the $6,000 of new room. Now altogether for this year, I can contribute up to $18,000. What happens to die? Well, TFSA is a tax-free account, so there is no tax consequence before the death of the account holder. And there is a couple very important